If you guys struggle with any type of psychology or emotional problems when day trading, specifically not following your rules or risking too much on a day and losing too much on a particular day, then this video is going to be extremely useful. I'm going to go over Friday the 10th of April's price action. Basically, we had a super strong draw on liquidity. There was an A+ loss towards this draw on liquidity, but should you be taking a second trade towards that draw, or should you just be done after one loss? Now, this is very, very personal. So I'm going to get into the technical analysis first, and then we'll talk about risk management and emotions. So if you look on the 1 minute time frame at 8:30 right here, let's go to the 1 minute. So yeah, 8:30 right here, or 8:29, we have this super, super strong data high. And you will know this if you watch the candle in live time, as this spiked up and then instantly spiked back down, leaving so many unfilled orders at the top of here. So this is such a strong draw on liquidity. So we mark this out as our data high. Obviously, this was CPI release. So very, very strong draw on liquidity up there. Now, you want to be looking for long positions to this high. So if you look at the 15-minute time frame, you can see here, we have an unfilled 15-minute fair value gap. On top of that, we have relative equal lows right here. So the best case scenario here is for price to come down, tap into this gap, and then we get a long position to the day high. On top of that, the higher time frame is substantially bullish at the moment towards these draws to the left. So longs made perfect sense on this day. So if we just play a price through off of open, we did get a 1 minute long here, but we weren't really delivering from anything. We're in between these two strong draws. We had these relative equal lows and also the data high above. So this long was not great, but prior to this long, we got an A+ long, as you can see here. So we swept our relative equal lows of sell side liquidity, and we then got this 1 minute inverse fair value gap. So if you guys have watched a lot of my strategy videos, a lot of my trade recaps, you will understand that this is such a good trade to take. So obviously some people might say this isn't a good trade, but that is for their strategy. For the way I trade in my strategy, this is A+. I had conviction in the setup. I would execute the setup 10 out of 10 times. And I know that over those 10 times, this will win 8 or 9 times out of 10. This trade particular happened to be one of those times where it lost. Now, how do you deal with this loss? Obviously, we still have a super strong draw on liquidity above. So how badly are you going to want to trade to this draw on liquidity as opposed to waiting and knowing that this is probably going to hit on the day but not taking a trade to it because you're stopping after one loss? Now, what you should definitely have in place is a set of rules where you take a maximum of so many trades per day. Personally, I stop after one loss. You guys might stop after 2 losses, but there definitely should not be more than 2 losses. If you take 2 losses, you're clearly on the wrong side of the market. It's just not your trading day. So you should be stopping after 2 losses at a maximum. Now, the reason I personally stop after 1 loss is because when I know personally in myself that when I take a loss on this long position here, the second trade I take, I am more likely to take a lower quality setup. And the reason for that is because even subconsciously, you are going to think that a setup is better than it actually is. For example, we get another long setup in a second. Let me wait and show. Yeah, so here, we get another long setup here, guys, which is still a completely valid setup to take. And you could have took this, but we haven't had a resweep on the low. If this setup failed, why would you then expect this trade to work? And as you can see, if we play this out, this also fails. And then we remanipulate again on the lows. And then eventually we then get a setup that finally plays out. If you look at this trade here, we inverse this 1 minute fair value gap right here. You could have also entered down here if you wanted to. Then this setup plays out to eventually, I believe, full TP. I don't think this actually comes back and hits break even. I think this does just play all the way out eventually. And okay, it does hit break even, but this mainly plays out. Yeah, 2.2 risk to reward. Now you would have got rewarded for this today. Now the bottom line here, guys, is taking that second trade when you are not emotionally stable after the first trade is going to weaken your edge over time because you are going to force trades that aren't 100% part of your edge, and that is going to reduce your win rate and your risk to reward over a longer period of time. So how do you actually know whether to take an extra trade or not? And this is very, very simple and very, very straightforward. So after you take this first trade, you need to be completely self-aware of how you feel about this loss. If you're emotional about this loss in any way whatsoever, you need to stop trading and be done for the day. If you're feeling greed to capture moves to this data high, you need to be done for the day. If you feel any emotions whatsoever, you should be stopping after 1 loss and just coming back fresh the next day and letting your edge play out with 100% mechanical trades. So what I mean by that is every single day, When you come into the market, you have a fresh mind, and every trade you take will be based on your edge. If you're taking a second trade every day, that second trade, more often than not, will be based off of emotions and not edge, meaning that your edge will not have the chance to play out as effectively as it could do. So you need to be self-aware of how you feel after taking that first loss, and then make your decision based on that. I cannot tell you, nobody else can tell you ever to stop after 1 loss or 2 losses. Only you can be self-aware, journal every single day, and you can make that decision for yourself. Obviously, some days it will pay off, some days it won't. But the main thing you need to think about is that second trade part of your system every single time? Or will you look back on it after the session and realize that was actually not an A++ setup that I know that I should be taking? So that is it for this video, guys. I thought this would be much more useful than doing a recap of this price action today, something more psychological and emotional. If you want to join my Discord, where we talk about this every single day, talk about price action, emotions, risk management, etc., check out one of the top links in the description, and make sure to drop a sub for more free education content. And I'll see all of you guys in the next video.